Good afternoon, everyone. I came across something yesterday on the Telegram group. There are so many discussions taking place, and someone talked about this multiple trades. Yeah, so sometimes when you're talking about the risk on your account, some people say that you need to have the normal risk is 0.01 lot size on an account of $1,000, but that is that is too much for some people. But anyway, they put 0.01 on $100, so normally that is recommended. 0.01 on $100. Yeah, so there is this scenario that so many people do this, and someone enters like 10 trades of 0.01 still on that account of $100. Now the 10 trades, they obviously increase the risk. So if all your trades are 0.01 and you have 10 trades, then you have a combined lot size of 0.1. Yeah, and that will give your margin call. It will put your margin call at about 100 pips. So that's where the risk is. If it's just one trade, 0.1, then your margin call is about 1,000 pips on $100. So when you add another trade, it keeps on cutting it down. It's like if all your trades start going into losses, then you have, if you have only one trade, then you'll have, let's say, negative 2. Yeah? But then if you have 50 trades, that is negative 2 times 50, that is negative 100. Yeah? And that will knock out your account. So if you have a small lot size on your trades and there are many trades, then you have a compiled big lot size. So I've seen people doing that. They see one nice trade and then they enter and they start clicking. Sell. First someone has clicked sell like 20 times, and then you have 20 trades, and you're happy knowing that you have a very small lot size on your trades. You think you're trading with 0.01, yet you have 20 trades, so you have 0.2. You have a very big lot, depending on what account you have. So that is something to be, you have to be cautious about that. Some people say that, that brings down your risk. You're managing risk by putting multiple trades of a very small lot size. Yeah? But, it's mathematical. You can just add them up and see. Yeah? So basically, if you're making more money from so many trades, you're obviously going to lose a lot more money from so many trades. So that is one issue. Issue number 2 is brokers. The priority for brokers is deposit and withdraw, period. If you are depositing with brokers, is very easy. All brokers accept money easily. The issue comes with withdrawing. Depositing money can take less than a minute. Yeah, it always takes less than a minute. You just deposit and the money is off your account and it's now into the Forex account. It takes a very short time. But withdrawing money is a very, very difficult task for so many brokers. So the priority must be especially how you withdraw money. That should be the priority. If it's very convenient for you, that should be your priority. So but that shouldn't stop you from joining any other broker. You might join a broker that makes you happy, and when you have high spirits, you can make profit. So you'll make profit there, and you'll battle out your withdrawal somehow. But you'll be with a broker that you want. Yeah. But if you really don't mind which broker you're using, then because at the end of the day, what matters most is how much money you get out of the market. Well, it won't really matter if person A and person B are trading, and person A has a very strong broker, but he's not making money, but he's happy. Person B has a very easy broker, and the person regularly withdraws money. Person B will have a lot more money than person A, and irrespective of the broker, because there's no way you're going to show that I'm trading with this very nice broker. You'll have to show your money, how much money you have made. You'll have to show that satisfaction that I've been making a lot of money, and I can withdraw easily from any of these brokers. It becomes very convenient. Sometimes you need, okay, especially if you withdraw to your phone, it's very, very convenient. You might need to pay for utilities or for whatever, and you just withdraw $10 or 15 or 20, and that money comes to your phone in about 10 minutes. So if you're trading and you do a good trade and it makes maybe $30, you can withdraw 20, or you can withdraw all the 30, and the money will come to your phone directly, and you can do so many things with money on your phone. So it's very, very convenient. It's better than withdrawing money, and first of all, you have to wait to achieve a minimum withdrawal, which can be about $50 or $100. So you have to trade and reach that minimal withdrawal. Then when you withdraw the money, it can take you like 5 days or maybe a week or two to get your money, and then it makes life a bit tough. So if you have just for convenience, if you have your broker that you really prefer, then by all means go for that one, but have another easy broker, so that especially when you've just started trading, it really matters which broker you're trading with. There's that need to feel like you're part of something. You're part of a huge broker. There are these brokers who, they're supporting football clubs and some rally racers. So those brokers, they really look nice on those t-shirts, and you want to be part of that. You want to feel like you're part of that, and then you go for that broker. And there's nothing wrong with that. But as time goes on, it just comes down to how am I getting my money? How fast am I getting my money? It won't really matter, when you get over that broker excitement, that this is a nice broker, this one is. Once you get over that excitement, then it doesn't matter which broker you use, because the market is the same. The market is the same. If you're a scalper, then some brokers might be better than others. But it all comes down to the spread. If you're a heavy scalper, then you need a very small spread. So there, your priority must be a spread. But big brokers always give big spreads. They never give you that small spread that will enable you to scalp away. So these other, especially new brokers, they give, they're very competitive. So they want to get clients, and so they give very small spreads, and they are still good, because these brokers have to be regulated, and they go through many systems so that they can be one of the brokers, so they can use MetaTrader 4 and all that. So when a broker is there on the broker list, then they are good. They are as good as the other broker, because they are all regulated by some serious systems. So you don't really have to fear. Just look at the market and do the best that you can in the market. That's where the real work is. Everything else is simple. Everything else is simple. It's like if you're going to drive a car, it's easy to choose a bond where you're going to buy that car. You might want the most prestigious bond. That is fine. Then you go there, maybe you buy a car, you look for whatever. But the whole thing is, you driving and how good you can drive. So, before you look at all these other things which are easy, buying these things is easy. It's like depositing money is easy onto the Forex account, downloading all that software, putting it onto your computer. All that stuff is easy. The real thing is the market analysis, getting in, buying and selling, and actually making a profit. That's where the hard work comes in. That's where the only work comes in. So all this other stuff, you shouldn't really spend too much time on it, because you're going to waste too much time choosing brokers and all that stuff. Yet you have to spend all your time on analysis and actually making money. That's where the hard work is. So if you get over the whole broker thing and all that, all that easy stuff, just put it aside and then start analysis, because that's where the real work is, and that's where many people succeed, and that's where many people fail. So and another thing is take demo accounts seriously. Take them seriously. Look at that money like as if it is real money. Then that's how you will improve your trading strategy, because so many times you just open a demo account and you put in random trades, okay, you do some analysis, but then you put in random trades. Then when you deposit money, you look at all those charts that you've been trading in, and you fear. You just get scared. You just can't push that button. So do analysis on a demo account, and take it seriously, because when you deposit money onto your account, that's the exact analysis you're going to place there, and that's the same profit that you will make. So trade until you have trust in your system. Having trust in yourself, motivating yourself, or all that stuff. It can be good somehow, it can give you an edge, but make your system as perfect as possible, because it's your system that will make money for you. Your feelings and how you feel about yourself, that may not make money for you, but the system, if you make it very, very good, then it will make money for you. That's why I've been talking about developing robots, which we shall come up with the ideas. I think I will start on it. Then on the Telegram group, I'm going to start on it. I start giving examples of what we should look out for, so that we start building robots. So the basic requirements to build a robot, it's all technical. It's all technical, but then you need precise moments. You need precise moments that can be repetitive, that you can repeat. So you need one scenario that you can place into the chart, and then it will repetitively start trading based on the same conditions that we have set. So things like higher highs and lower highs, that kind of scenario doesn't really play out. There's too much data. There's so much data inside there, because you don't have, the higher highs, they're not in fixed points. They're not in fixed points that you can program. You will need to program so many other scenarios to get that. It's possible, but then it will take a very, very long period of time. But then at the meantime, you can start looking at oversold positions, overbought positions, different periods for indicators. When you're having the exponential moving averages, and how many periods you've given it, maybe 50 periods, maybe 100 periods. So we come up with that. Like when do the moving averages cross each other, the short term and the long term? At that point that they crossed, someone can say when they were crossing here, the same thing happened with the CCI, with the RSI, with the what. So in that precise moment, all of this happened to give us this outcome. That is why it moved maybe 15 pips, maybe 20 pips. So that movement, what caused that movement is what we program, and then we do it repetitively, so that every time it happens, we trade like that. And you can't normally see that kind of thing with your naked eye. You can't see it all the time. Because there are like 5 indicators there, and there's that precise moment when it entered, and maybe next time there will be 4 indicators, maybe there will be 3, maybe it will happen 3 days from now again, maybe 5 days, and that time period you might not be keen, because human beings are very dynamic. We change all the time. There's too much change in the mind, in the thought process, and everything. So this one here will be sort of it will be rigid, so it will be looking for that same scenario over and over in about 50 charts, and so that is how we shall be testing those strategies. So I will kick it off. I will give a suggestion and put a robot, a video showing how it worked and how it kept on pulling out those trades in every scenario, and then just like that we start building other robots. If one robot makes about 5 trades in 1 month, then 10 robots will make 50 trades in 1 month. If each trade gives you like $1, then you have like $50. If each trade gives you like $2, then you have 100. But all those trades will be programmed to open at specific times, so that they are as accurate as possible. So on the economical end, there are just 2 events affecting the US dollar. One is the gross domestic product, which is at 330. The other one is the Jackson Hole Symposium. Yeah, that is something new. Yeah? The Jackson Hole Symposium. Yeah, so it's something. Okay, it's sponsored by the Federal Reserve Bank in Kansas City. Okay, this is very, very American stuff. But anyway, this one there's nothing previous. There's no consensus. Yeah, so this one here, this one is a real surprise. So it's going to really surprise us. The other one is a gross domestic product. Here we have an increase from 6.5% expected to increase to 6.7%. Yeah, so basically, that one it's very obvious, very obvious. So higher reading is positive, lower reading is negative. So here a higher reading is expected. So if it comes out higher than the previous one, even higher than the consensus, then that will be very good. Tomorrow, Friday, there's only one event registered, which is a retail sales affecting the Australian dollar. That will be at 4:30 a.m. So you can, Friday is normally a very tough day for many people. But anyway, you can just be awake at 4:30 a.m. and see where the market heads, and then you can see what to do about that. So for this one here, a higher reading is bullish for the Australian dollar. A low reading is bearish. And what is expected is a low reading, lower than the previous one, which was 1.8%. And what is expected is negative 2.3%. Yeah, so that is, that is what is expected. Yeah, so yesterday we looked at this chart, gold. This is a 4-hour chart. So I drew these lines, at the end of yesterday's program. And I think price was here. Okay, price was in between these two yesterday. So this one, that is one, it was here. Yeah, it was around on this candlestick here. So we're having this serious resistance and price broke below this support, Yeah, so price fell up to this line. So this one, I was taking this previous bottom, which is this one here, and then I just made it run along this support level. And so that was one area that we were expecting some resistance, and price has been resisted, and so maybe it's going to shoot up, maybe it's going to break below and continue downwards. The Fibonacci retracement levels for yesterday were this, price moving to this 23.6, and we have a meeting area there, both this support level there and then this 23.6. There's a strong resistance, so there's a strong support for price there. And maybe if price breaks below, we can continue trading to this 38.2, about 110 pips. Yeah, those are many pips for gold. Let's see yesterday's price movement. It was around, yesterday was around there, somewhere in between there. So it moved about 42 pips of gold. Anyway, 100 pips from the 23.6 were 38.2. If we are selling, if we are buying, it's more of guesswork. That one you'll have to go into a smaller chart and try out your luck. If you're buying, so that's where we are. Yeah, but looking at this, price is barely. So it is basically moving downwards. The 30-minute chart, in the 1-hour chart, it's basically bearish. So if you're buying, then your analysis must be very, very nice. Yeah. So so like what I was talking about, this is the Euro USD 1-hour chart. Drew this yesterday again, and this had actually turned out well. It turned out really well. Price broke out above and then continued. So the pips that it has moved, that was yesterday at 6 p.m. I said at 6 p.m. price broke out above, and it has so far moved about 26 pips, and Here we have about 27 pips for this. Okay, maybe let me measure it from this first support level to the resistance, about 30 pips. Yeah, so maybe we have another, let's say how many pips to make 30, about 26, about 4 more pips to make it to 30, and then can start doing more analysis there to see how far it's headed. But that was a good breakout yesterday, broke out above there, and these were zigzag things, they normally make good money. They make very good money. So that's what I was about the robot thing. Maybe I can give you a quick example here. Let's say I put moving average. This one is 20. Okay, this one is 20 period. Then I put another one of 50. Let me make it yellow. So we have 20 is short term, 50 is long term. So at this point, when they cross, we can program the robot. Let's say the midpoint of the relative strength index is 50. Yeah, so there we can have the baseline for the robot. Yeah, so conditions to buy or to sell. In order to buy, we say when when this RSI crosses, when the long term was above the short term previously, and now the short term is above the long term, then when the RSI is above 50, then we buy. Yeah, so at this point, the robot will meet the conditions to buy, and it will do it any time of the day or any time of the night. So here it will buy. The RSI is above 50, and then these two have crossed. Red has come above yellow, so we buy automatically. Not us buying, but the robot will just buy without us knowing. And the time there is about 2 a.m. Yeah, so at 2 a.m., this one would have bought. Then conditions to sell is when yellow comes above red. Yeah, so here yellow and red, the yellow has crossed above red, and price is below the RSI, so that gives us the conditions to sell. So there the robot will sell. That was 7 a.m. Then it sells, and you can make all that money. Then there are conditions like here it slightly crosses below. You can't see it, but then it slightly crosses below. It can give you a false trade. Though the RSI is not really below 50, but it's somehow there. Yeah, so that is one thing. That is something to look out for. Here, when red crosses above yellow and RSI is above 50, you buy. Yeah, so the robot will buy, and it will maybe that is 7 pips. It will first come down for a while. You have there negative 13 pips, and then eventually you have a rise. Yeah, so here it will buy, and here you'll have a period of time where you'll have a heart attack. You'll be scared, and you'll start saying, this robot. You start blaming the robot. This robot is yeah, so that normally happens anyway. It's not new, so that can happen, but then price will eventually go up. Yeah, so other areas where you have crosses, here it crossed. Now here it will have crossed below. Okay, here it crossed below. Red came below yellow, and price is somehow below the RSI. So that's another condition. Here it can shoot up, jump starts your heart, then it comes down, and then you start jubilating. You forget that the robot first took you up there. Then there will be this area here. Now this is the most dangerous area in Forex, the range market, because here you're going to get a signal to sell. There, the RSI is below 50. The long term is above the short term, and then it gives you the signal to sell there. Then it starts climbing up. So there, it can be very bad. Then another area is this one. It starts maybe to buy, but then here the RSI is below 50, so you might not go for that. You might not go for that. Here selling, you can just see how troublesome this area is. The moving averages are just crossing each other. So in such a scenario, you just shut down the robot. You shut it down, and you go and relax. Here where you have a clear crossing, you know, the RSI is above 50 and these two have crossed, yeah, you buy, it somehow goes into negative, positive, negative, positive, negative, positive. Then here the news scares you, it jumps down there, then it continues. Yeah, so that can be a good strategy for, you know, for long term. So there, you know, there are so many examples you have just looked at. So that's how you test your strategy. You look at your strategy and see the conditions under which you buy or sell, and then you start trading according to those conditions. If you just program these ones into a robot, it will start doing this thing. It will start selling here. The RSI is below 50 and the long-term average has crossed the short-term average. Then it starts selling. You know, you can jump out with 19 pips or even 20 pips there. And after meeting this support levels here, you just get out and take your profit. Yeah? Here, when it you know, when it goes up to buy, RSI is still above 50. And there is some 30 pips to that tail up there. Maybe you can take 20 pips somewhere there, and you get out. It's not really an upward trend, so you don't need to really stay in there. This one here, they have crossed. The robot will still sell negative 12 pips. Here there's positive 38 pips, shoots back up again, negative 13 pips, goes back down, negative 40. Sorry, positive 45, positive 50, yeah, just like that. So positive 50, let's just calculate that right now. Positive 50 pips, it's like 50 pips, that is 500 MetaTrader 4 points times your lot size. If it is like, let's say 0.2, you have $100. In that, so the robot can do that for you. So yeah, so that is just a simple example of the baseline for a robot. Yeah, the moving averages crossing each other. If they cross each other in an upward direction, then they will look for the RSI. If it is above 50, then, you know, we just buy. You know, it will buy. The robot will buy. We command it to buy under those circumstances. If it is to sell, then the RSI must be below. So if you're looking at these areas here, like here, you'll have one trade. Then the next trade will be around there. That is after, that is 110 hours. That is like a whole week. So there you'll be getting maybe one trade every week from such a robot. Yeah, one trade every week, making some, you know. So if we make another robot like that, which will give you another 50 pips, if we make like 20 robots like that, I can do all the coding. I can do all the coding. Coding is not difficult, just takes time, but it's just monotonous, but it's not difficult. So that can be done. So it's just bringing in the ideas, putting our heads together, and coming up with strategies that actually work, that we can test, that, you know, this repetitive cycle actually makes money. You know, if it makes money, then we put it there. We don't really have to look so much into it. If we test it and it makes money, then, you know, it's like if you're testing certain liquids, see which one catches fire. You put water, put on it a matchstick, nothing happens. You put petrol, put on it a matchstick, and then it catches fire. It has caught fire, and, you know, you've finished your tests. Yeah, so once we test the robots and they make money, then we put them into the real account and we just keep on throwing robots there. You know, every time we test a new one, we drop it there. So we shall be having those discussions on the Telegram group. If you're not part of the group yet, you can join it on, just search for Trading Dawn on Telegram. It's easy to join Telegram group, so you just search for the name and you get there. You don't necessarily need an invite link. Or if someone can invite you, then you can join. It's all good. Or you can search for BVB Trade FX. It will lead you to the same and exact group. So you just join it, and we shall start having these discussions. But you can start thinking about such entry points. So you should realize that this totally knocks out things like divergence, price action, these trend lines you normally draw, such things. But I have already pre-coded Fibonacci sequences. I have pre-coded pivot points. I have pre-coded, the cheat sheet robot, those candlestick patterns. So yeah, you can just think of a strategy where all those fit in. So I can just get the code from where I put it, so that I just copy it, paste it there, align it to the rest of the new code, and then you can have your strategy there running, and we test it. If it makes money, we go ahead with it. If it loses money, just, we brush it off. There's no use to, there's no purpose in keeping a strategy that doesn't work. You just write it off, and then we continue building and thinking about better working strategies. So by the end of 1 month, 2 months, 3 months, we shall have enough strategies to give us, enough trades in a week. And, just like that, we just keep on building like that. So if you're not part of the Telegram group, you can just search for it, Trading Dawn or BVB Trade FX. Just join the group, and let's start something new like this. Yeah, something that is I analyze based on so many other strategies. Price index and all these divergence and everything. Those are my favorite anyway. But this robot making, it's something in a whole new league. Something that needs a different type of thinking. Yeah, this other traditional way of thinking is good for manually trading, but the robots, it's something new. You think different. You think in patterns, you think in repetition, and it's quite interesting, and it's very, it's very nice when you're looking for those patterns. It's really, really nice. There are so many things you can see that you didn't see before. So let's get to it. Let's start the discussions, and let's see how we can build our accounts in the coming few months, the coming many months and many years. Yeah, so thank you for watching. That's it for today. Have a good day. Goodbye.